But we might ask you about rising rates. Rates have been falling, of course. How big of a stimulus has this acted as for the U.S. housing market?
Yeah, so Brian, thanks for having me. You know, honestly, I think we're in a bit of a sweet spot for housing right now. As you were talking about with the prior guest, don't think the Fed's going to do anything this year. And with that and the slower pace of global growth, rates are going to be steady. So we think mortgage rates about 4.5% this year as opposed to 5% where they touched last year. Then you got the incredibly strong job market and wage growth accelerating. Finally, we're seeing a bit more inventory on the market, so potential homebuyers actually have some homes to look at for the first time in a couple of years.
Yeah, but Mike, how sensitive are today's buyers to these little moves in rates? I mean, we saw the big spike in November, and that pulled buyers back at the end of the year, and then rates fell. We saw a huge drop in March. That really juiced new home sales. We saw that in the data yesterday. But it seems like every time we see these small moves, all the buyers are, either ready to jump or ready to pull back. Is that because of higher prices, or what's making them so sensitive today?
Yeah, it's a great question. And Diana, as you know, in the mortgage market, we always focus on two parts. So you have the refinance market, which is incredibly sensitive. I mean, if you look over the past couple of weeks, mortgage rates up about 10 basis points. Refinance volumes dropped about 30%, right? So the refinance market, so sensitive to any change in rates. Purchase market, there are more factors involved. So you got the job market, you got the level of inventory. Rates are just another tailwind that benefit the market. And so far this spring, that's been a positive. But I agree, November last year, we got up to 5%. That was a bit of a headwind. But I think for your typical buyer, it's both the level of rates and the stability. And I think this year, rates likely to be much more stable, and that's a real positive.
You know, Mike, we talked about this years ago, and we always talk about now how nobody seems to be moving. Is there any data, and maybe Diana, you can answer this, any indication that all these refis hurt people selling their homes? You refinance your home, maybe you take some money out of it, you're sitting on basically a new mortgage. It's harder and more expensive to move. Do refis, which sound good in the near term, actually damage the housing market longer term?
I wouldn't say they damage it, because if you look at household balance sheets right now, household debt service is so low because of that long refi wave that we had. So households in a really strong position. But to your point, it probably does lower mobility a bit, because someone being a little less willing to give up that 3.5% rate they have on their first mortgage. But that said, if someone has a child or has a new job that causes them to move, that'll make them overcome even that rate advantage they have. So it's a little bit of sand in the gears for mobility, but it's not going to bring things to a halt.
I actually, Brian, think that it's not only the refis that we saw years ago that are keeping people at that very low 3.5% rate, but we talk about supposedly inventory is rising. It's not actually rising because of new listings. It's rising because homes aren't selling as quickly and they're beginning to pile up. And that's not a good sign going forward. You want to see the new listings come in, not the stale ones.
But if you've got, Diana, let's say you're sitting on a 3.5% or 4% mortgage, and eventually, maybe, interest rates do rise. You can't take that rate with you.
No.
So you're going to have to pay more on a monthly basis.
And you're also going to have to find a home you can afford.
Exactly. I wonder if low rates ultimately are a net negative long term.
Yes, absolutely, because they juice prices.
No?
No, certainly not a net negative. They're a benefit to the current homeowner, but I'm going to agree with your point that it is going to slow down their likelihood to move.
But don't you think the low rates over the last several years are what really put that fire under home prices? I mean, prices went out of control in the last 4 years.
The problem is, as we've talked about before, is just the lack of supply in the market. Home builders have been constrained for a number of reasons: lack of labor, high input costs, land inventories down. And so, nationally, last year we saw home prices going up 6%. That's decelerating this year. They're still going up, but they're going up, 4.5% as we're getting some more inventory on the market. And we're going from, 4 months of supply to maybe 4.5 months of supply on the existing side. So it's still a pretty tight market, but trending towards a buyer's market.